Welcome to The Milk Check, a podcast from Ted Jacoby and Company, where we share market insights and analysis with dairy farmers in mind.
Hey everybody, welcome to The Milk Check. We're going to have an old-fashioned market discussion today. We got a lot going on in dairy markets right now. It's the middle of October. Markets are moving, but not in the direction that they usually move in October. It seems like everything wants to go down right now. And we'll start with the product that seems to be most bearish today, the one we've been talking about a lot lately. Joe, what is going on with butter?
Butter is interesting today because we're actually up. Long-term sentiment really hasn't changed. There's not really a whole lot new to talk about on the butter. Markets aren't linear, so we're going to have these choppy trades here and there where some buying comes in and things get pushed. But there's plenty of butter still out there. There's plenty of butter being offered out there. Right now, there's a good amount of demand, but we're anticipating that that's fairly short-lived. We've got holiday demand for another couple of weeks here, and then that should probably tail off. We'll see what happens after that.
So we're $1.60 and $1.60 and a half today. It's Friday, October 10th. Felt like a little bit of a dead cat bounce after really dropping pretty hard earlier in the week. Is that what it is? Is it a dead cat bounce?
I wouldn't call 1/4 of a cent on spot a dead cat bounce. The moves on the futures, 3 to 5 cent moves with 10+ cent move intraday. There's no shortage of volatility.
What do you think will be happening in the next month? You think maybe we'll bounce off this, go up a little bit for the next couple of weeks, then all the orders that need to get filled for the holidays get filled, and then what?
I think we take another leg lower. I think we'll be sub 150 before the end of the year.
I agree. We're at prices so low that a year ago, it would have been really hard to imagine we'd ever get here. And the idea that we could even go lower from here just seems unbelievable. But that's the market we're in right now.
Less than 24 months ago, we were all talking about $4 butter coming, and there was not enough fat to keep up with demand. And now we're potentially going to the 140s. There's so much fat that we can't consume it all. But we also have to remember that this is all cyclical, and at some point, these low prices are going to cure the low prices.
Yep. Meanwhile, let's talk a little bit about protein. The more bearish we get on butter, the more bullish the protein markets seem to get. What's going on in the protein markets right now?
I think we got to define which we're talking about with protein, because if it's protein with over 34% protein, it's pretty hard to find, particularly with the whey proteins. If it's 34% or under, most unstandardized non-fat dry milk is quite a bit above 34. So maybe let's say 40. It seems like we can't find a bottom. So really two very different markets at the moment. So if we start on the high end of the market, we've experienced over the past 2 years now, a continued move higher in the appreciation per unit protein for whey protein products, in particular, WPC80 and WPI. We want to credit certain things for being a catalyst, like GLP-1 adoption in the US, but I think we got to be even bigger than that. Health and wellness is worldwide. We're seeing strong growth in demand. People are paying attention to what they eat. Clearly, they're concluding that whey proteins supplemented into many, many products is a good way of increasing your protein intake. That doesn't seem to be changing. And although we're talking about very, very high prices in the US, Europe also has very, very high prices. And as of late, it's leaving additional markets, other markets, the import markets for these products wanting more. We'll see an additional load or two of product available in the US, and it's sold to a US customer before the international customer even gets a look at the price. I don't see that changing. And the reason I can confidently say that is because we've got customers that are looking for purchases further out than they traditionally would. Normally, that's a quarterly traded product. About a month from now in November, that's typically when we'd be talking about Q1 prices. And as of today, we've got customers that are asking for any product available and willing to commit into the second quarter of 2026. In addition to that, there's things that have disrupted the supply chain. In 2025, we had several new facilities coming online, and not all of them have come on as expected. So we're anticipating some additional supply of WPC80 and WPI. Some of it has materialized and some of it has not yet. But this isn't a supply shortage driven issue. This is truly demand, new demand creation. And we're seeing that in a lot of different areas. We're seeing incremental growth in the normal segments like sports nutrition, shakes, things like that. We're seeing inquiries on a weekly basis from consumer packaged good products looking to infuse protein into some of their traditional snack foods and products like that. Even this week, the headlines coming out like Starbucks introducing new protein coffees. These are all new drivers. This is all happening at the same time that we're seeing increasing demand for acidified whey proteins going into beverages. There's just more demand right now than we have supply. And it's going to take the market a while to cure that issue. We have a lot of cheese production in the US, so it's not an issue that we don't have the whey solids available, but do we have enough processing of these high whey protein products? Not yet. Also, when you're in a very, very tight market, just like Joe mentioned, low prices will cure low prices. At some moment, lack of supply, high prices will cure high prices. I'm not sure how that's going to shake out as we go into 2026, but right now it feels like, at least for the first half of the year, we're going to remain very, very tight whey proteins. Now, let's shift down the complex a little bit. Anybody who can't afford to pay for WPI with these new applications is looking to trade down. WPC80 is, as mentioned, very, very firm and in very, very tight supply. Those that might have traditionally used WPC80, maybe not instantized WPC80, but regular WPC80, are finding that they can't compete with the new demand creation in that category, and they're trading down. That's already impacting alternative proteins. We're seeing more inquiries for vegetable protein and other products in high concentration. The other half of that story right now is we are a big producer in this country, traditionally of WPC34, and then shifting out of the whey complex into the milk protein complex. We are increasing our production of MPC 70s, 85, MPI, but we still make a lot of non-fat dry milk. And that is a totally different story.
When it comes to the non-fat complex, I think it follows the same story as most of the other products. There's a lot of milk in the US and in other milk sheds, and a lot of that product is ending up in non-fat or skim. We're expecting that the price during the first quarter of next year is going to be heavily under pressure because the US is probably going to have 10 or 15% more non-fat production than it had 2024, just because of what happened in California, right? It's almost inevitable unless you go into a steep discount to European and New Zealand products that we start building inventory, because Mexico itself cannot sustain the US from building inventories if we had such growth. A lot of discussion around how much milk or the cheese plant's going to take out of that strong growth that we're seeing. And as a summary, the conclusion where we have arrived is that even with the cheese plants growing and taking 3 to 4% more milk this year, we're still going to have double-digit growth in milk availability and milk going into the dryers. Yeah, definitely the picture is not bullish. Prices could go and test the $1, maybe 105 during the flush or maybe before the flush. And yeah, hopefully after that, we see a demand reaction, demand creation, and some multi-nats just building length, traders building length, and inventory starting to stabilize or move lower. When it comes to the MPCs, what Josh has mentioned is something that we are already seeing. I was at a trade show in Mexico this week, food tech, and I had a very interesting interaction with a customer where they told me that they were in desperate need for WPC80. And because nobody was able to offer a spot load, because most of the loads are staying domestic, because it's easier, obviously, to sell to a domestic customer than an international customer. They were desperately trying to buy something. And when I mentioned that maybe there is some other option for them, maybe better protein or NBC, they immediately jumped and they were very proactive and very open to trying a new source. That's the initial signal that we take for other products to start appreciating and subsequent. Yeah, just very interesting conversations in Mexico where demand seems to be stable overall, but they're seeing a little bit more milk around.
You know what, Diego? I had an interesting conversation with an expert I know earlier this week. He said the reason there's a bigger gap between whey protein prices and milk protein prices than you would expect is all of the nutritional research that was all done on whey proteins. And so when they're developing these high protein products using dairy proteins, because all the research has been done on the whey proteins in the whey complex, that's what they want. They haven't done the same level of research on the milk proteins. And his comment was that research is coming. It started and it's coming. And that longer term will contribute to narrowing the gap between the two as well.
Let's simplify it a bit and remind everyone that MPC does have whey protein in it.
But it's fascinating to me when you suggest try milk protein. What? What's that? Milk protein? In our business, you're right. We tend to take it for granted that everybody knows that whey protein is a subset of milk protein. So the protein complex is strong. The butterfat complex is weak. The WPC 34 market is what, Josh? Weak?
Yeah, that's a tough one to get your arms around today because there's really two different classes of WPC 34 in the market. You have the infant grade class and you have the calf milk replacer class of WPC 34. And frankly, because of this draw on the liquid whey solids for WPC 80 and WPI, the calf milk replacer class of WPC 34 is on its way to extinction, it feels like today. There's a certain portion of the market that's always going to produce that. But to be clear, if you're looking for a 34% protein in the market today, the best buy is and will continue to be non-fat dry milk or skim milk powder. We've seen over the last decade a lot of the different feed applications that have been very willing to interchange those two products based on the best value per unit protein. So that's why we think there's really two segments of the market. There's above 40% and below 40%. And when you say protein is strong, above 40% is quite strong. Below 40 is actually quite weak at the moment.
Well, WPC 34 was originally developed to compete against non-fat dry milk and skim milk powder, which is 34% protein at a cheaper level. Well, as the whey complex and as whey proteins gained more and more demand, that ended up getting flipped on its head. And so for things like calf milk replacer, financially, it just makes sense to use non-fat dry milk these days rather than WPC 34. What about cheese? Jake, I'll go to you on cheese. What's been going on in the cheese market?
Yeah, I don't actually think there's a whole lot different than the last time we had one of these discussions involving cheese. It's pretty hard market to move a lot of product in. It just feels heavy is the best word to use. In the immediate term, it's not quite as doom and gloom on the surface as maybe the butter discussion we had, but it just feels like the storm clouds are over the cheese market for the foreseeable future, which is similar to butter. All this really nice protein demand we're seeing means we're probably making cheese that otherwise we don't necessarily need. Add on top of that, a newly competitive export market. For a while there, we kind of had our run of exports. We could really get whatever cheese we needed to get out of the country fairly easily. We were the best price in the world for a while there. Not necessarily the case anymore. It's becoming more difficult to really make a nice bull case long-term for cheese.
This week seemed to be the week where the bears just really showed up in volume in the cheese futures market, class 3 market. My gut told me it was coming from two places. One, there was a big trade show in Europe earlier this week, Anuga. Everybody was finding out that the Europeans were going to get really aggressive on cheese prices. That spooked the market a little bit. But the other is the time of year. This is harvest time. Dairy farmers are out there they're harvesting their corn. Corn yields are pretty good this year. Usually at the same time they're harvesting their corn, they're usually starting to hedge their milk prices for next year. They already know milk production is up 3%. I think most people are talking about how that's a sticky number. It's not going to suddenly go away anytime soon. So dairy farmers are a little bit desperate to make sure that they're getting their milk hedged for next year too. DRP programs are kicking in and people are using those programs to get hedges on. So there's just a lot of sellers in the futures market. And while they're probably chewing through some of the layered in hedging programs for the buyers of cheese, it just seems like the sell side this week has been overwhelming the buy side.
I'll just say all of the above. It is just really hard to even find somebody to have a bullish conversation with, almost across the board of our dairy products. It's notably bearish out there for different reasons for different commodities. Probably the single most bullish thing that I can personally point to is just that so many people are on one side of the boat right now. All it's going to take is one little flash in the pan to really set this thing off. That could be a black swan. It could be something that isn't a black swan that we're just all missing. But as far as I'm concerned right now, If you are bullish and you really want to make that bull case, I would love a phone call from you.
Talking about cheese, Joe mentioned it earlier. When the price lowers for cheese across the world, there is additional demand to be captured. So what price accomplishes that for cheese today? What finally drives more cheese consumption to consume the supply that's available, particularly out of Europe and the US?
I asked a major marketer of cheese this week. The way I phrased it was, if the price of cheese on the CME goes below $1.50 and stays below $1.50 for 6 months, would we find new demand? Could we expect demand for cheese to go up 2 to 3%? They said absolutely. They said, if you're under $1.50, but you have to be under there long enough for people to start adjusting their formulations, for people to start maybe adjusting their SKU prices on the shelf, the demand is there to be had. One of the challenges, I think, in the dairy industry is that you can get a wholesale price go really low, but it has to stay down there for a while before those prices feed all the way through the system and the end users start adjusting. 6 months tends to be kind of that number.
$1.50 CME spot market is a lot different than $1.50 futures as well. How our futures curve reacts to any drop we may or may not see is really the $1 million question. Right now, we're inverted or at least flat on our futures curve. And that futures curve is really the thing that these export markets are looking at more closely than anything. If we get to $1.50 on a futures curve, look out. If somebody could go book that for the next 6 months, that's going to probably bring a lot of demand to the table. Now, if our futures decide to hang out at $1.65, even if our CME spot market goes to $1.40, that's tougher for the export markets to really capitalize on.
We all know the supply chain takes a while, and it takes a while for prices on the commodity level to filter through to the retail shelf in particular. Is it happening at the right time of year? Are we doing enough right now? Because this is the budget time of year, from all the way through the complex into the consumer facing markets. This is that time of year where there's a lot of budgets. Are we showing enough of a signal today to potentially stimulate demand in 2026?
I will go on a limb and say we're there in butter. Those discussions are happening. We're not quite there yet in cheese, but we may be there very soon. All right, I'm going to ask another question. Are we so bearish right now as an industry that we're setting ourselves up for a short squeeze? Jake?
We need some catalyst for it to be more than just a 1 or 2 week, somebody playing a game with the market kind of thing. If we get an actual kind of sustained short squeeze where there's actual panic of, hey, I might not be able to get that product that I thought I'd be able to get, I think there's going to need to be some catalyst that we don't know about.
Okay. Makes sense. Markets that get this bearish, where everyone, and I mean everyone, is on the same side of the boat, what ends up happening is people just fail to position themselves to deal with the fact that the market's going the other way. You can get the smart money that's short. You can get the big money that's short. But in a market like this, you'll also tend to get the weak money short, and weak money can't stand a short squeeze. And so the minute the market pops, everybody who's not in for the long haul just gets spooked right out of the market. Dairy products in general are relatively inelastic products because it's food. So it doesn't take a big change in supply to create a big change in price. And this year, we hit the tipping point where we literally flipped from a fat deficit nation to a butterfat surplus nation. And we're probably going to be there for a long time. We're in the middle this year of what I would call a generational shift in market dynamics when it comes to butter and butterfat. Well, I'll sum up the discussion as this. We're bearish butter and butterfat. We're bearish cheese. We're bearish anything with carbohydrates. We're bearish with anything less than 40% protein. And we're really, really, really bullish anything above 40% protein. Does that sum it up?
Fairly well.
All right, guys. Take care, everybody.
We welcome your participation in the Milk Check. If you have comments to share or questions you want answered, send an email to podcast@jacoby.com. Our theme music is composed and performed by Phil Kagi. The Milk Check is a production of TC Jacoby and Company.